I'm Dan Fitzpatrick at stockmarketmentor.com, and it's Sunday, April 6th. In this video, I want to look at Biotech and also a new indicator. Members, I'm going to go into more detail in this indicator in the second video, typically the sector spotlight. This time it'll be like an indicator spotlight. So anyway, I hope you find this helpful. But here's the thing on Biotech. This was like yesterday's trade. Actually, well, yeah, it was yesterday's trade. If you're looking at Friday, down 4%. But this is one where the bloom has come off the rose. I'm sure probably several of you are still holding Biotech, and it probably ticks you off that I'm saying that now. But it's not me, it's the chart. The 50-day moving average had been really pretty consistent support for the stock. Even as it drifted a little bit shallower than it had here, it still held the stock through this high base. This was also another base. So this has been forming kind of a series of bases that have ultimately been eclipsed by higher prices. Well, this was different. We get a big move up, and this is when everybody's yipping about Biotech, and it was just great. But look at money flow here. Okay, and this is one by Mark Chaikin that really parses volume and closing location values on on stocks over a particular moving average. He uses 21 days. So it's a closed indicator as opposed to an open indicator. Members, I go into more detail in the strategy session. But here you can see money flow peaked on this high here. So when Biotech prints a higher high, but this money flow barely even registers, in fact, I'd say it didn't even register at all, that's a pretty key indication that at least you've got, and this isn't the, the holy grail of indicators, but this is a pretty good indication here that you've at least got to keep your stops pretty tight. And when this thing breaks below the 50-day moving average where it had always held, this is like a total danger Will Robinson sign. I mean, you got to get out of this stuff. Let somebody else who's not as smart as you buy this dip. Now, what about the 200-day moving average? Well, I haven't really seen it be particularly relevant before since 2012, but this is a pretty steep decline. So, and by the way, once this momentum is broken, it's not like it's just going to race up to higher highs. Momentum stocks and sectors, after they've broken, just don't do that. Money finds its way elsewhere for various reasons. So anyway, just keep your eye on this. Maybe you're going to get a little oversold bounce here, but if you're sitting there holding some of these dogs, thinking that the market's wrong and that you're ultimately going to prevail, I mean to tell you that the market's not wrong. The market is big enough to where it actually gets to define right. And if you're big and you get to define right, then guess what? You're not wrong. Okay, members, get over to the weekend update.